Imagine you are holding a crisp $100 bill. You know exactly what it is. It's issued by the Federal Reserve. It's backed by the United States government. If you deposit it in a bank in New York, it is protected by insurance and watched by regulators. But the moment you take that dollar and deposit it in a bank in London or Singapore or the Cayman Islands, a strange alchemy takes place. That money ceases to be American. It is no longer under the jurisdiction of the United States. It has no insurance. It has no safety net. It has become a ghost. Welcome to the Eurodollar market. It is a financial system estimated to be worth over $13 trillion. That is larger than the economies of Japan, Germany, and the United Kingdom combined. It fuels global trade. It dictates the price of your mortgage. It decides which governments go bankrupt. And technically, it doesn't exist. This isn't a conspiracy theory. This is simply the plumbing of the global economy. And like most plumbing, nobody notices it until the pipes burst. It started in the 1950s, strangely enough, with the Soviet Union. The Soviets needed dollars to trade oil, but they were terrified of keeping their money in American banks. They thought the US government would seize it, so they struck a clever deal to keep their dollar deposits in London banks instead. A British bank holding American currency for a Soviet client. It was a loophole, and like all profitable loopholes, it exploded. Here is where the math gets uncomfortable. Inside the United States, banks have rules. If you deposit a dollar, the bank has to keep a fraction of it in reserve. The Federal Reserve watches the ledger, but in this offshore market, there are no reserve requirements. There is no one watching. So Bank A in London lends a dollar to Bank B in Zurich. Bank B lends that same dollar to Bank C in Tokyo. All three banks now list that dollar as an asset on their balance sheets. They have effectively created money out of thin air. They are building a skyscraper of debt on a foundation the size of a postage stamp. Most of the time, this system works. It makes credit cheap. It allows a French company to buy Saudi oil using American dollars without ever touching the United States. But it relies on one very fragile assumption, that not everyone will ask for their real dollars back at the same time because there aren't enough of them. In 2008, we saw what happens when the illusion breaks. We call it a global financial crisis, and we usually blame housing. But the deeper truth is that it was a run on the Eurodollar. Banks stopped trusting each other. The ghost money evaporated. The global engine seized up because everyone suddenly realized that for every real dollar in a vault, there were 20 claims on that dollar circulating overseas. The only reason the world economy didn't flatline is that the Federal Reserve panicked. They flooded the world with trillions of fresh, real dollars to backstop the ghost ones. We patched the hole, but we didn't fix the pipe. Today, the system is bigger than ever. We are $13 trillion deep in a currency market that has no central bank, no government guarantee, and no physical reality. We go to work, we save, and we assume the money in our accounts is ours. But in the shadow banking world, money is just a promise, and promises are only as good as the person making them. So, who is holding yours?